Are you ready for the 4 best indicator signals? I've prepared pullback, retest, breakout strategies using amazing indicators, great signals. So make sure to watch until the end. There's a lot of cool things coming. So let's get started with the first one, and this is a combination of the stochastic and a moving average. I used the very default settings on the stochastic, 1433, and a 50 period moving average, whether I use the SMA, the EMA, doesn't matter. And what you want to do is you want to trade pullbacks into the trend direction, and the moving average helps us to determine, are we in a downtrend, are we in an uptrend, is the price below the moving average, we are in a downtrend, is the price above the moving average, we are in an uptrend. And then you want to look for pullbacks back into the moving average. And obviously if the market is in a downtrend and you want to short, the best possible price to short is at the highest possible price, obviously. And those are pullbacks, and we look for pullbacks in the market. So here you can see the market is coming close to the moving average. And when the market is coming, or when the price is coming close to the moving average and the stochastic is not above 80 in the case of a downtrend, there's a very low likelihood that the market will actually break above the moving average, as we will see later. So when the market is coming into the moving average from underneath and the stochastic is somewhere here well below 20, there's a very good chance that the market will actually reject the moving average and continue downwards. Here as well, you can see the market came back close to the moving average, well below the 80 level, probably more around 50, 55, and the downtrend continued further. Here, a very different picture. You can see when the price broke the moving average here, the stochastic was already above 80, and then it completely indicated a new trend change, or even foreshadowed a trend change. The next time the price came back into the moving average here from above, you can see the price came into the moving average around here, and the stochastic was already below 20. So you definitely don't want to look for a long opportunity here, because the stochastic is a trend strength indicator, and if the stochastic is below 20, it indicates a very, very strong selling market and a lot of bearish pressure. So you definitely don't want to buy here when the stochastic is already underneath the 20 level. Here, on the other hand, you can see the market is coming back into the moving average from underneath. It even breaks the moving average here for one candle. However, you can see the stochastic is here around the 50 level during this breakout attempt. So there's not a lot of bearish pressure behind the move. And this may help you understand when breakouts are likely to succeed versus when breakouts are likely to fall back and turn into a fake out. And this happened exactly here. The breakout was rejected with the next candle. The stochastic indicated, okay, there's not a lot of bearish, bullish pressure here in the market, and you can see the market really collapsed afterwards. Here in this scenario, the price was mostly in an upwards trend. The price was above the 50 period moving average, and then it pulled into the moving average a few times. Even if the market breaks the moving average here, you can see that the stochastic at no point dipped below the 20 level. And here we even have one of those famous W setups. A W on a stochastic is often a very, very strong reversal setup, and you can see the market pulled back below the moving average and then continued the uptrend. Here as well, the market was pulling into the moving average, but the stochastic was here well above the 20 level and around the 50 level. Here the price was breaking below the moving average once again, but the stochastic was here above the 20 level. Again, we have a W forming here, so great continuation set up to the upside. The market topped out around here, a double top, and then this time when the market broke into the moving average and broke below it, you can see now the price action, or the stochastic, is also below the 20 level. So now there is a much higher, or there was a much higher chance, obviously we know how it played out, that the market and the breakout was succeeding. So you can see it's a very, very different picture, a breakout here versus the other breakouts here. The second setup is an RSI trend following. I love to use the RSI with a 50 level, so this is a regular 14 period RSI, and I just drew a 50 level in the middle. And what does it mean is, when the RSI is above the 50 level, you are in an uptrend. When the market is below the 50 level, then you are in a downtrend. And you can see here, you can use it in a very similar way. You can first of all look for breakouts underneath or above the RSI with the moving average. So when the market breaks below the moving average, for example, and also the RSI is below 50, then there's a very good chance that you're actually looking at a very solid trend change, and the likelihood that you're going to see a follow through to the downside is very high. You can also see pullbacks when the RSI is below 50. have a much higher chance. You don't want to see pullback when the RSI is above 50, because it would mean that there's a lot of bullish pressure here behind the move. But you can see during this downtrend, the market and the RSI never moved above 50, not even close. So this is what I was referring to when the market is breaking the moving average and the breakout happens with the RSI above 50. It means that there is a lot of bullish pressure behind the move. So you are looking at a potentially more higher probability breakout that will lead to a complete trend change. You can also see that when you see a pullback into the 50 period moving average, and you can see that the RSI is still above 50, there's a very good chance that there will be a strong follow through and a strong move away. Whereas here you can see there was a move into the moving average as well. Here you can see that the RSI dipped below 50, so obviously there was no way to buy here. And if you would have sold here, nothing works 100%. That is very important in trading. Whatever system, whatever indicator you use, and nothing works 100% of the time. So even the best setups, they will fail. Even the best indicators will have periods where they don't work. So that is why traders have to learn to cut losses and learn to how to maximize their wins as well. So this is the trend rider, which is an indicator that I built and I developed over the years. And the link to that in the description below if you want to use it. And the trend rider, as the name suggests, is a trend indicator. It helps you with getting into trades, and it also helps you with riding trades. So the best, or one of the best ways how to use the trend rider is in combination with breakouts. I love horizontal breakouts. I love trend line breakouts. So what I do in my trading, I look for horizontal levels, for example. So you can see the market was in a downtrend. Here you can see the market was in a sideways period. We can very nicely define our horizontal support level here, connecting this low and this low and this low. We wait for the breakout, and if the breakout occurs when the trend rider is also giving you here a red bar on the momentum study in this histogram, then you're looking at a high probability breakout. At the same time, you can see that the background color is changing between white, red and green. And if all of those things align, a breakout, a red here on the momentum study and a red background color, then you're looking at high probability trades. And you can see as long as the background color is also still in the red, then you're usually good to go to hold onto your winning trade. Here you can see the market then topped out. Here's the first time when the background color turned to white, so it's a good time to get out of a short. And you can see at the same time we can nicely define here our wedge, or maybe even a triple bottom. And you can see we have a trend line here. We connect this high and this high. We wait for the breakout. The breakout occurs with the strong green trend rider here. The background color is green, and you can see afterwards the market really rallied higher quite a bit until this candle where the background color turned white, and it so gives you an indication that okay, this uptrend may be over. Maybe it's best to look for trade exits now. Here another example how the trend rider can be used with breakouts. That's how I use it in my trading. So we have a wedge pattern here where we can really nicely define a sideways range. With the wedge, you can see we have a trend line, 1, 2, 3, 4, 5 touch points. Here we have a breakout buildup. The breakout occurs here, very strong breakout. The trend rider turned green. The background color is green, and you can see the market moved higher for quite a bit. Here was the first time that then the background color turned white. So you could have gotten out around here if you're using the background color as your trade exit. And then here on the downside, the same repeated. You can see if I move this out of the way, we have something like a head and shoulders here. The left shoulder had the right shoulder. Nice trend line, the breakout. The breakout also occurs when the momentum study here is turning red and the background color is red as well. So if you want to get the trend rider, the link to that is in the description below. We also have some special deals for it, so make sure to check that out. The next one is the Bollinger Band with breakout. I already talked a little bit about it in my last video, and there's a lot of interest. So what I have here is the Bollinger Band with. You can find it in TradingView. This is the default setting, 20 periods and 2 standard deviations. And what you want to look for on the Bollinger Band width is you want to have a small or a low Bollinger Band width. So a period, or preferably a long period, where for a long time the Bollinger Band width was moving just very, very narrowly and at a very low level. And also I used the moving average from the daily time frame here, the 50 period daily time frame. And the daily time frame can help you to understand the direction. If the price is generally above the 50 on the daily, you want to look for long entries because those are with the long-term trend. And what you want to do is also use the Bollinger Band as a breakout indicator. So when you can draw support and resistance levels or trend lines on your Bollinger Band indicator, then you want to wait for a breakout. And by the way, this is something that many people overlook. You can very nicely use trend line support and resistance on your indicators if you're using a stochastic, a MACD, even an RSI. When you can define your indicators with trend lines or horizontal support and resistance, wait for those breakouts, and they're often very, very interesting setups. Here again, you can see we can very nicely chart a trend line here on the Bollinger Band width. It's declining, which means also that the price action is narrowing down. And you can see we have here a triangle pattern. And you can see on the breakout, this is also where you have a breakout here out of the Bollinger Band indicator, and the market moved higher quite a bit. So now we have the last one, which is a very interesting one. I love this one. So although we are here on the 1 hour time frame, this is the the daily 50 period moving average. So this moving average comes from the daily time frame and is the 50 period. And what you want to look for is pullbacks into the moving average. And when the price is above the 50, you want to look for pullbacks into the trend direction. So you're looking for opportunities to go long with the long-term uptrend. If the price is below the 50 period moving average, you want to look for breakouts below it. And what is very interesting, especially the first pullback. So the market is in an uptrend here above it, breaks below the daily, comes back into it and retests it, comes back above it and trades into it, retests it. And here you can see it didn't work out, there was no real pullback. And then here it breaks above it, a pullback and into the trend direction. So those first pullbacks after the market has broken the daily 50 are very, very interesting trading signals. Here as well, you can see the market broke above the moving average, traded back into it, had a double pullback here, and then traded higher. So moving average retest, especially with a higher time frame 50, which is a moving average that I use in my trading a lot, can be very, very high probability trading setups. So let me know in the comments below which was your favorite one. You want to know more about the stochastic pullback, you want to know more about the RSI 50 level, you want to know more about the trend rider, you want to know more about Bollinger Band, or you want to know more about the daily moving average retest. Let me know in the comments below. Also make sure to leave a like and a subscribe, and you will see or hear from me very soon.